And I'll just drop this link in our little group. Okay, I see a lot of bearish, and I see a lot of bearish to ranging. Okay, and let's talk about it. Let's talk about it. All right, so we're in an uptrend, right? The market pulls back. It creates a higher high. So this is our swing low, right? The market pulls back. It creates a higher high. This will be the swing low. We break the swing low, right? We break the swing low. We come back. It creates a lower high. We come down, a higher low, and we break the high. So this would be a higher high. This would be the new swing low. The market comes down and breaks your swing low. Once it breaks your swing low, we are in a bearish market. All right, the market pulls back and it is ranging over here. So your expectation is once we get a break of the swing low, you always want a pullback, 50 to 78%. If it breaks your swing high, you always want to pull back 50 to 78%. So we don't have to guess, or we don't have to get fooled in all this wish-wash, right? You're waiting for a specific thing to happen now that we broke the swing low. The problem with trading one time frame, and a lot of people just get stuck on this 4-hour time frame, is the 4-hour time frame is a great time frame when you use it in conjunction with the higher time frames, right? Because the 4-hour time frame is just the 4-hour time frame until you throw the daily on it, right? So when you throw the daily on this time frame, and in this case, they're pretty close. They're pretty close to being matched up. The daily is saying the same thing as the 4-hour. So I would still be expecting price to pull back, 50 to 78%. And I would look for an imbalance that's in this range, right? When the market pushes down, it pushes down with force and it leaves a trail of imbalance. Does everybody know what an imbalance is? I don't want to lose anybody when it comes to these smart money concepts. When you get the market pushing down or pushing up, but in this case, it's pushing down, it creates what we call displacement. Okay, we'll talk about those of you who see bullish. Do y'all understand why I said it's bearish? Do you see why this market is bearish? For those of you who say y'all see bullish, you see bullish, you see the pullback about to happen, but the market is not bullish. It's going up right now because you just got to change a character. The market was bullish. Then it came and broke the swing low. Now the market is considered bearish. So, but you got to pull back into this area before you keep pushing down. It's on replay. It is on replay. It is on replay. But I want y'all to understand what you're looking for as a trader. If you understand what you're looking for as a trader, you're going to be, it'll be harder to fool you as far as the market movements, right? So on this weekly chart, I'm recapping the trade that I took last week. So on this weekly chart, right, I understood that we came back and we broke the swing low, right? I know we broke the swing low. I know this right here was considered the chalk move, right? I'm in the wrong spot, but because this was the pullback before we made the new high. Once we broke that low, that swing low, all I'm doing now is waiting for the market to pull back. Don't let this extra push down fool you, right? It's still going to pull back. This move right here, when we broke the swing low and it pulled up and it went lower, it's just filling this imbalance, right? So you would look at this move down as one move. And all you got right here was a complex pullback, right? So this move down, that's one move. Now the market needs to pull up and mitigate this imbalance, which it does right here. It mitigates the imbalance. Now the market is pushing down, but it's not just going to push straight down like this. You're going to get the side-to-side action as it comes down. But we're looking for the market to push down to continue to break these lows. Is everybody tracking? Okay. So again, when I look at this move pushing up, what this series of green candles creates some displacement here. There's an imbalance right here. So when this market comes down, as traders, you should understand that once this imbalance gets filled right here, the market is going to bounce off of it. You're going to get some recoil. Market comes down and hits it again, and you get recoil. So all I'm expecting now is for the market to push up, right? I'm looking for the imbalance in this area over here. And why do I pick this area that I'm looking for my imbalance in, right? Because this is the move down. We took the liquidity. So this move down, right, broke these lows over here. And I know on the weekly chart, these are wicks, but if I'm down on the 4-hour, this is real candles. This is real structure that we're breaking through. We break through structure. The market pulls back. We need to see where it's pulling back to. So all I'm doing on the small scale time frame of this weekly chart, I'm taking this weekly bullish order block. I know y'all might not see these as order blocks yet, but if you trade with me, you're going to see them as order blocks soon enough. So I'm just want to take my Fibonacci. I want to measure this green candle, just the green candle. I want to mark my golden zone on this green candle. Your golden zone would probably look a little bit different. I have my golden zone set to the 65% instead of the 62, but it's still the same thing. You mark your zone. I like to put a horizontal ray at my 78%. This is standard practice for me, guys. This is not, I'm not going to change this from week to week. This is standard. I'm always going to do it like this. Then I'm going to delete my Fibonacci. You notice on my Fibonacci, I have the 88% mark. You can add yours too, right? But I delete my Fibonacci. Now I drop down to the 4-hour time frame. On this 4-hour time frame, all I'm looking for is for price to come to my zone, which is already in my zone, right? And then I'm looking for price to push up. On this 4-hour time frame, I'm paying attention to the structure. I see how the market came down. I see how it pushed up and broke this high. I see how it created some internal liquidity right across here. Then I see how the market came and took that liquidity. This is smart money to a T, right? It was probably you know, a bunch of traders that got liquidated right here in this little range, you know, because they were trading. Once they saw this chalk move, this push up and pull back, they entered the trade. And I don't blame them for entering the trade if they entered and got fooled. But if you wait for an order block on the weekly time frame, then you would have, this is when you would have been looking to enter trade, and you would have avoided this massacre right here. They created liquidity. Boom, they took everybody's money. Now the market moves up, breaks that high, and pulls back. So all I want to see in my area of interest is a chalk, right? I want to see the market push up, and I want to see it pull back, right? In my area and on a lower time frame. I'm not waiting to see it on my 4-hour time frame. I'm waiting to see it on a lower time frame in my area of interest. And it just so happens that this will be a Sunday open, right? So y'all know we can't trade the first hour. So I like to use that first hour to see if we can get a bang out candle, a candle that pushes up. And then that second hour, it comes back to pick me up, and then I'm in the trade. Now I'm in the trade and I can go about my Sunday, and just hopefully be in profit by that night. That was my expectation. Now, remember, I drew this area in because I showed you on the weekly chart where I was kind of looking for. So you can take a Fibonacci and measure from this wick down here, and let's just do it just for people who don't believe yet. If I take this fib and I measure from this top to the bottom, the golden zone, my little area of interest is a little bit off, but it's still in my golden zone and my 78. So if I look at this chart and I expand so we can actually see these candles, look where my imbalance is. Look where my imbalance is. So this area is the right area that I should be looking at. This market pushed down with volume, right? It displaced. We call this displacement. We broke structure. And now the market's turning around to come back and fill these imbalances before it drops further. So as a smart money trader, you need three things for your trade to be valid. You need an order block, right? And on some time frame, right? I don't know what time frame we'd have to be on, but this up move right here, see all these green candles? This up move followed by this down move is an order block on some time frame. You can just add all these candles up, all these 4-hour candles together. You can add them up and then add all these 4-hour candles together, and you can see what time frame. It might be the 2-week time frame. It might be the 1 week. There's an order block right here. Inside of that order block, you have the displacement candles. So every time you see an order block, you're going to see a wick come back up into that order block to close that imbalance, and then the price will push down. In this case, there is no wick. So you just had an order block and it moved the market away. So when you have those order blocks and the market doesn't come back to tap into those order blocks will be utilized at a later time for the market to come back. So all we are looking for is for price to push back up and fill these imbalances. And as a trader, if I have a 100 pip runway to this zone, right? If the market opens and I can catch my trade at this middle line, look where my 100 pips are going to be, right? Back up to this top is 100 pips. So all I would need to do is to catch me a 100 pip trade. Is everybody tracking? Is anybody lost?
No.
Okay, everybody's good.
Yep.
Okay, so I'm going to drop to the 1-hour chart, y'all. I want to drop to the 1 hour because this is exactly the time frame that I'm looking at when the market opens. Tomorrow, I'll be doing the same thing on the 1-hour chart because I can't play on the first hour. But what I want to see is a chalk, right? I want to see a change of character in my zone, and then I can take a trade. Pay attention. This is an imbalance. So probably, this is probably going to push up, fill this imbalance, come back to let me in the trade. It's not going to violate that order block. Y'all see that 1-hour order block? Remember, I said you need three things to have a valid trade setup. You need an order block. You need an imbalance, a displacement, and you need a break of structure. We got it right here. You see that? You see this high right here? This is a break of structure right here. Is everybody tracking that that's a break of structure? It's not, it doesn't look like it on the 1 hour. But dadgummit, it's on the 5 minute. You see the structure. You see the high. You see these highs. You see them get ran. You can see all the green candles. That's the imbalance we're looking at. Everybody tracking?
Yep.
Now, y'all never have to drop to the 5 minute.
Yes.
I'm not saying, hey, you must be able to drop to the 5 minute. What I'm trying to explain to everybody is you can use these candles. The market came down and made a low. It made a high. This is a high. It comes down a little lower. It runs the liquidity out. Then it pushes up. So all we're waiting on for the price to come back. Now that we've ran this high, we're waiting for price to come back. And it's probably going to feel this imbalance before it comes back. That's my thought process. The market opens and I be goddamn. The first candle off rip. The market doesn't even come from here. It gaps up. The market starts right here. And it pushes down. It gives me everything that I asked for. So after that first hour, all I had to do was click buy, put my stop loss, and ride. That's it. You could have got in right here. This is 96. 100 pips is what you would have been aiming for, right? 29 pip stop loss if you wanted that far. If you just wanted to go to this thing, 22 pip stop loss. If you're using $3 per pip, you would have risked about a third of your account. If you're using $1 a pip, or you'd have risked about 75% of your account if you lost. If you had lost and you risk $1 a pip, you're risking about a third of your account. I know it's a high amount to risk. Use a demo to check it out or whatever. I use my real account, but this is exactly what happened. Okay. Oh, how did I get to the monthly? So I got in this trade an hour after the market opened. So obviously it was 1900. And Monday morning at 10 a.m. I was paid. All right. Monday morning, 10 a.m. I was paid. If you used $100, your account is $200. If you used a $3 lot size, your account is $400. If you use a $2 lot size, your account is $300. And the market ain't even, I mean, we just started. So this trade was over on Monday. And all because we did our analysis. That's it. That's the only difference. I didn't try to get the whole move. I got what I needed to flip my account. Now I can look at the market and look for my next trade. Next trade, right? You don't have to trade again this week if you don't want to. For me, I'm accustomed to catching two moves, right? I don't try to force it. I take what the market gives me, but I have an idea of what I'm looking for. The same way you will, because you're going to come into the week with a plan, right? Your plan was to catch this original move. You know that price is going up here. You don't have to hold on to it. You just need to get you a little bit to flip your account. Um, the other move that I was looking for, and I knew that this would probably happen, the second move of the week, was a UJ sell, right? And for those of you who have been in this group for a while, let me just go ahead and let me just pull up the Discord so everybody can see it. If you've been in the group for a while, you know that I trade based on candle closures, right? So the 6-month candle had closed. I was looking for JPY sales. So this is Wednesday morning, 8:24 a.m. on Wednesday. I saw on the 12-hour chart, I saw this bearish order block. Now, I anticipate the move. I'm not reacting. I'm anticipating. I know that for 6 months, UJ has went up for 6 months. The US dollar has been going up. So I see the trade setup that I'm looking for, right? I like shaking my head. You got to love fat girls. UJ is my fat woman. I can hear her warming up her vocals. The fat lady's about the same. Some replies. I said, I'm not interested until Asia's session, right? I'm not interested in this trade setup until Asia's session. I got exactly what I wanted. The market showed exactly what I wanted to see because let's go look at the chart. So if I look at this on the 1 hour, you can see this very, very clearly, right? This is the first of the week, right? The market pushes up, it creates a high, it pulls back. This is the 1 hour swing low. It pushes up and it breaks the high that it just created. Now the market just blows through the swing low it just created. It blows through the 4 hour swing low down here and it pushes all the way down. Now, mind you, I put my little message in the group at 8:34 a.m. This is 10 a.m. Market pushes down. It pulls all the way back up. When does it get to my spot? At the end of the day, right? 1600. So we go through the break. I'm in this trade. I got in this trade right before we went to the session close, right? Right before we closed out. I went and I ate that fee. I ate that swap fee. I entered this trade and I just set my TP at 100 pips. And of course, Thursday night, I got paid. As simple as that. This wick told me everything I needed to know. I know we had room, right? I knew the market was coming to fill this imbalance, which was all I needed, right? And I felt that we could break this low. We are going to break this low, but I felt that we could have broke it. But because of where the market was, because I had a 100 pip runway, there was nothing that would have stopped me from taking this trade. Even if I would have had to hold this trade through the NFP news, I knew that we was going to hit this spot. So I didn't worry. The difference is I didn't wait until Friday morning and try to catch this up move and pull. No. I took the trade whenever it broke structure. I took the trade at the time that I dictated, Asian session, right? I wanted to get in before Asian session just in case, because sometimes we'll get an Asian session and something dumb will happen while the market is closed, and I think this did push way down at first and it came back up. But I just wanted to be sure that I was going to catch my move because this is move number 2 and this is gravy. This is a gravy move. So if we back up and you had $100 and you traded the max, you traded the $3 lot size, you would have went from $100. You'd have made $300 on that first move. Your account is now $400. That would have happened from Sunday to Monday. Wednesday, you would have took this trade basically at a $3 lot size for every 100. So you'd have used a 1.2 lot size and you would have caught this trade down and you would have went from $400 to $1,200. So you would have made $1,200. So your account would have went from $100 to $1,600 off 2 moves. It's that simple, right? Now you're not going to win every trade, so maybe you would have taken a loss. This we didn't take a loss right here, but maybe you would have taken a loss, and you would have lost a significant portion of your account. The next trade is coming back. Like the way that we trade, you're taking your grade A setups. You know what you're looking for. It's not a guess. So you get in the trade, you set your parameters, and you wait. It doesn't require any adjustments or none of that. It's easy to pick your stop loss. If I'm entering the trade here, right, my stop loss is going to be above these highs, right? If you understand what you're looking at, you could have put your stop loss above this candle or above this candle. Either way would have been fine. If you had used a 30 pip stop loss, that's cool, right? You just won your trade, a 30 pip stop loss. Uh, you know, if you believed in the setup, you'd have took the trade, you'd have taken the trade. This is a 3% trade, once you get your account to where you want it to be. You're not always going to trade with ridiculous lot size, but we're taking $100 and we're growing our account to whatever number you want to grow it to 15K and then trade like a normal person where you're worried about your percentages. That's cool. Um, you know, I started doing this in December. I took $100 to $22,000 in December. The first trade after December, I took out of December. We caught UJ. we got the first buy of UJ. I didn't hold it, but I made a lot of money on that trade. So you can do whatever it is that you want to do, and it won't take long, but you have to follow the process, right? We're not guessing, guys. We're taking trades based on the setups. We know our targets. We're trading to these imbalances. We're trading to these zones. We're looking for liquidity to get ran. We have a checklist. Once the checklist is met, we're in the trade, right? Guys, if you know that you're looking for a trade at the market open, you can't be at the movies, man. Like you can't be at your son's softball game, or if you are, you need to have good Wi-Fi. Like we have to be responsible. Like if you ever want this to pay for your lifestyle, you have to approach it with the level of seriousness that will help you, um, you know, achieve your goals. For those of you who are second and third guessing, this is market structure 101, right? Why did I know exactly what I was looking for? Why did I know that I was going to get my move on Asian session? Why did I say I wasn't interested until Asian session? Right? I don't want this wick. I want to wait until after the market breaks structure, after the pullback. I'm not FOMOing because I saw that move down. I'm waiting until you pull back up. If I throw a fib on this move, if I throw a fib from here to here, look where this move is, man. This is a 78. So yeah, I got in right here. You do think I don't care? I don't care about these highs. You know why I have this 88 on my fib? Because that's where I'm protecting, bro. This is me all day. I'm not protecting way up here. If I lose a trade, I lose. But for me, I've done this for so long that I'm trusting what I'm analyzing. And I'm not analyzing different. This is the same analysis that I'm doing every time. The break of structure. All right. A wick is a break of structure on smart money. That's how it works. This wick is just telling you that the market is about to push. Then you get the pullback. Then you get the actual cascade. So we're pushing down. You see how we ran these lows right here. We set up another move for next week. This is relative equal lows right here. This is relative equal. I expect a pullback, and then I expect to keep pushing down. Right? When we break swing lows, especially key swing lows, the 1 hour, the 4 hour, the daily, we should expect the market to pull back to our 78%. Look for the imbalance around it. You're going to see it. You're going to find it. And while we're in a group, these are things that we need to be talking to each other about, right? When you're dropping your markups and your trade setups, it should be based on those things. All right, Kimmy, what you said, what if somebody waited for a 15-minute break of structure at just 78? Would that have worked as well? You mean right here?
Yeah, I was just wondering if maybe if we didn't use the fib, so if we didn't know the level, but we did wait for it to retest.
Or why wouldn't you use the fib? I'm just asking.
It's not a
Yeah.
force of habit for me yet. I'm trying to make it a habit.
Well, are you winning?
I am not winning. No, I'm not.
So, bro, use the fib. Use the fib.
Yeah, use that, Fib. You better
Listen,
use it.
huh?
It's so helpful.
It is. I like we don't
Okay.
have to reinvent the wheel, but let's talk about this 15 minute. Let's talk
Okay.
about the 15 minute. My only problem with people is if you have an excuse about your entry, you're gonna find an excuse on any time frame that you're using, right? So if we're looking at this area and I got in this trade uh before the market closed, right? So probably around this area somewhere. And you can see it gap down, right? The market gap down at 1700. So I'm in this trade already. But if you're using the 15, you can't get in this trade until 1800. So let's look at where 1800 is. All right, this is 18. This is when you would have been able to get into trade. So you tell me where you would have liked to get in the trade. This is the first bearish order block, but we didn't break this low yet. So what I would ask you is, if you're telling me, right, you're telling me that you would have gotten in this trade based off this break, would you have gotten in that trade based off that break?
No, I don't think I would have felt
I don't think
confident
you would have
getting in
either.
right there. Yeah.
And this is the problem. Anytime you start making this subjective, you're talking yourself out of the trade. So you had the break already over here on that 1 hour. Now you have a break on this 15 minute, right? You get this 15-minute structure break. I think I'm a little bit high here. Okay, I've just fibbed from the top of this move to the structure break, to this down move right here. The market pulls back into your golden zone and it drops again. It breaks another piece of structure. When are you entering? So here's what I suggest to everybody. I suggest that everybody uses this Fibonacci because this Fibonacci doesn't ever change. Your opinions change. The Fibonacci never changes, right? So if I'm looking at this structure on the 15-minute, if I'm being subjective, I don't really want to enter this trade until I see this imbalance filled. Just me personally. This is me. So the market never would have filled my imbalance. And I never would have wanted to get in the trade because I would have looked at this as a level of inducement. The market comes here and it rolls off and leaves me. If I use the fib and I had entered the trade based on what I already saw, it already broke structure and it already pulled back to the 78. You missed your entry for what? Please explain why you missed your entry to this 100 pip move. To this could have been your second 100 pip move. Why would you miss this? You got to help me understand that. That's what I don't understand. So give me your explanation of why you wouldn't have taken this move right here. The move started here. It pushed all the way down. It pulled back all the way to your 78. Why are we missing this? Anybody?
Well, they
So,
weren't using a fib.
well, yeah, this is the problem with us traders. The market gives you everything you could possibly ask for, and you still talk yourself out of this money. Whereas if you use your tools and you see this push down and you get the pullback, if you have your stuff on automatic, it's going to put you in the trade automatically right here. Automatically, without asking you a question. You automatically got put into the trade. And then when it was time, the trade pushed right to your TP. If you're going to be a part of this experiment, I'm going to ask that you forget everything that you think you know if you're not a profitable trader. There is a reason that you're not getting your results because you're overthinking it. It either is or it isn't. It either did break structure, right? This move either did break structure or it didn't. Once it breaks structure and pulls back, you fib that move. It either pulled back to your OTE or it didn't. I wouldn't have even had a problem if you entered at your 62 and you protected all the way up to your 88. I don't have a problem if you enter a trade like this every time. In this case, you may not have, yeah, you still would have got paid. You still would have made your 100 pips.
Kimmy, do you have your fib settings like set up?
Yeah,
Kimmy.
I have a setup. I met with Todd and I have a setup.
So do you have you still have your fib set up?
Yeah, I still have the settings from the day we met. Yeah.
The greatest thing about this group is you're going to be required to show your fib, like your markup, your chart mark. Every week we're going into the market. We're all taking the same trade. So you need to show your work. That means your chart should be dropped in the group with your golden zone, with your 78 marked up. You should know what imbalance is your area of interest.
Okay.
This is a group, guys. The group, show your work. Show your work. If you have a standard entry, hey, I'm entering every trade when it pulls back to the 62, I can live with that. If you're saying, hey man, I'm not entering any trade until it pulls back 78%, I can live with that too. All I'm trying to tell you is the market gives us everything. Every time it gives us the setup every time. We either believe or we don't. You shouldn't require the market to do extra because most of us are black people and we don't want nobody to require us to do extra. We want to do the same stuff that they require to other people who ain't black to do. So the market is the same way. We shouldn't require extra. Once this thing broke structure and it pulled back, that was our entry. And that's why I'm in this trade before the market was closed. But if you anticipate, I anticipated this move based on a 6-month candle. Right? I believe in my heart of hearts that price is going to fall. And it's going to be a journey that takes us about 1,000 pips, at least. That's just to touch the golden zone. I do this candle the same way that I do any other candle, right? This is a bullish order block. I'm a fib. I'm fibbing this green candle. Yeah, I know I'm way over here, but I just do it so I can see it. My vision ain't the greatest. All I did was fib, from the bottom to the top. I mark up my golden zone. I mark my 78. I delete my fib. I can drop down on the 4-hour. Even on this, I can drop down on the 4-hour to look to see the imbalance. Oh, well, you're lucky there. There's imbalance in my zone, right? So this is going to go over 1,000 pips to fill this imbalance at some point. If I look at my zone, I can see trend line liquidity, right? I can see, these areas of liquidity. I can see another imbalance. It doesn't matter if I think that this price is going to keep falling once it hits the zone, right? We can argue. We can have differences. We can have differences of opinions of what price is going to do once it falls this 1,000 pips. I think it might fall further than that and keep falling, but it doesn't matter. That part is really not important. The important part is as it breaks structure and it pushes down, that we can be a part of this move and we can actually grow our accounts and we can get paid off these types of movements. You guys have any questions?
Yeah, quick question. Do you do market execution or you set limit orders?
Well, it depends. So for that for the trade that started the week, it was a market execution, right? That trade that I caught for UJ, it was a limit order that put me in a trade. But I would have market executed regardless, right? Even if that didn't hit the 78, I would have market executed before the close of the Asian session because it was very close. Does that make sense? I'm all about my area. I'm all about my, let me show you what I mean. Let's go back to that 1 hour chart. So for me, ten, 11, 12, at 2 o'clock, look, I know at 2 o'clock, I know that all we have to do is close this gap, right? Maybe fill some of these imbalances. Now, once this thing started pushing back up, I had already fibbed it, and I had a automatic entry right here at the 78. I had the 78 was my entry. My stop loss was right above the 88. So I knew that this is where I was going to enter the trade. Now, if the price would have kept pushing up, I would have extended my stop loss, right? I would have extended it because I know that this is selling. It's not a question to me whether it was selling because this break of structure told me it was selling. But price is close enough to my entry that, let's say this candle would have been here, and this is the last candle of the day. I would have market executed before it got to my 78 because I don't know if it's coming to the 78. The 78 is a luxury, but it's close enough to the 78 that I would have market executed and taken my entry just to get this, this position. Does that make sense?
Yes, it does.
I want to kind of keep this as simple as possible. I can get as in depth, as y'all want to get, but for the novice, for the new smart money trader, this is going to be very, very simple, right? When we get an order block, is going to be on the weekly time frame. We're going to actually see how the order block break structure. I'm going to look at a GU. All right, this is a weekly order block. This is what a weekly order block is for me. I know some of y'all might not see this as an order block, but I just pretend that this candle right here is going to a red candle, right? We get a push up, we broke structure. You can see the high of that wick is broken. Now I expect the market to pull back. So what's my first step, somebody? What am I supposed to do here?
Fib it.
Fib.
Fibbing this candle, I'm fibbing the direction. The same direction the market went is the same direction that I'm going to fib, right? After I fib, what's the next step?
Mark up the golden zone.
Okay, I'm putting a box in my golden zone, right? Next step.
Your 78.
I'm marking my 78. Now I have no more use for this fib. I can delete my fib. Now I'm doing the 4 hour time frame, right? I'm dropping straight to the 4 hour time frame. What am I looking for? I'm looking for any imbalance in my zone or any imbalance at my 78, my optimal trading entry. So maybe price comes down to my zone and it pushes further down to fill the imbalance, at the 78. Sometimes you see price fill at the 78, 88. So we have imbalance down here. So this price could actually pull all the way down here. I don't think it will, but it could, there's imbalance. So we can take the counter trend trade, right? It's a counter trend trade because the trend is actually north. We could take a counter trend trade all the way back down to our golden zone. If price sells from where it is now, which I don't think it will, that's 105 pips. Why don't I think price is going to sell from where it is now? Because if we just take a half a minute to look over here, you can see that this is a displacement candle that pushed down. And all we did was push down, we broke structure, and now we coming back up to fill this imbalance. Okay, when I zoom in over here, I want to drop down to the 1 hour, because what I really want to see is, where did the imbalance start on this 1 hour? And that's all I did with this box. I want to start my box at where that imbalance. You see the wick of this red candle? I'm going to start my box in this area and just let it go across. I know at the top of that box, we've like closed the imbalance. So I know that we got a bullish order block on the 4-hour chart, which tells me there's a good possibility when the market opens, it's just going to buy up to this area before it starts selling. That's an option. That might be what we see. We might see a 18 to 20 pip move up, and then price start pulling back. So if you do have a green candle that starts pulling back, what does that actually mean? If you're on the lower time frames, right? If you're on the lower time frames, you're going to see candle structures going up. Then you're going to see a break of structure coming down, a pullback, where we can probably enter the trade at some point. Maybe we can enter the trade right when the market opens. Maybe it's a few minutes later or whatever. But then we'll get in the trade and we'll take this trade down for 100 pips. Y'all tracking?
Todd, I have a question.
Mm-hmm.
Your green box at the top, on the 4-hour, you put it on the wick. Was that covering the entire wick?
So on the 4-hour, I don't want you to look at it on the 4-hour. I know it's on the wick on the 4-hour. I only put it here because I dropped to the 1 hour, because I want to see where the structure is on the 1 hour. Because if we feel this imbalance, I want to see how high it can go on the 1 hour. It might just touch our box. It might just go up here and touch. Or it might be a little bit short. It's no guarantee that this 4-hour chart is going, it's no guarantee that price is going to go past the wick on the 4-hour chart. See the wick right here?
Yes.
There's no guarantee that price will go up there. I'm just looking at possibilities. So anywhere in this area is fine. Anywhere in there is fine. But I want to know how high it can go, to close on the 1 hour. So maybe it goes a little higher. It doesn't, to me, it's immaterial. I just want you to understand that maybe price doesn't break down and start pushing. Maybe it goes higher, right? There's always that chance. Maybe price does break down though and start breaking down and pull back, and it goes here first and then buys up, right? Are you guys bullish on GU, or y'all bearish on GU? Or do y'all not have an opinion?
Bullish.
So y'all are bullish. I'm bullish too on these higher time frames. I know this candle is not finished, right? But if I look at this is a 2-month chart. We have a month and 24 days left, and we've already gapped out, right? We've gapped out. I'm looking for price to continue to go higher, at least up to about this level, right? I believe we got 400 or 500 pips we can push out. I'm not suggesting that that's gonna happen anytime in the next couple of weeks. I'm just looking at the overall chart. We're probably going to be bullish. This gap is probably not going to be filled in my opinion. This move happened off some good news, some bad news for the dollar, but some good news for the British pound. So if I'm bullish on this, maybe price pulls back first before it handles the things that it needs to accomplish up here. I'm just trying to be flexible, as far as when I come into the market. I don't want to have a one-way mindset, because if I just think the price is going to sell and it goes up here first, then you're thrown off, right? Oh man, this trade ain't gonna work out. No, there's a couple of things that can happen. It could buy up first, and then you get your move on London session, or you can get your move immediately that you can get on Asian session. All I'm telling you is we want to catch this move, and we want to get paid out of this move. We're probably going to get paid out by Tuesday, right? The first move would probably pay us by Tuesday. And then we can get the second move, which is probably that UJ sell, on Wednesday again. When this is selling, UJ is going to be buying. When we finish our sale here, we can hop in UJ for the sale, or we can buy GU back up. It's really an option that we'll have and we can talk about. And at this point, for me, I would ask if y'all had a option of what you wanted to trade, would you rather trade GU or UJ? Do you guys have a preference?
I would say GU.
I would say GU too.
I probably would say UJ.
UJ.
GU.
So see, you have a difference of opinion. And for me, I would pick UJ over GU all day, every day. GU can't compete with UJ as far as pip count, but it doesn't matter. Like those are secondary arguments, right? And as a team, we trying to catch 100 pips the first time, 100 pips the second time. Now, listen, it's going to be times when we catch more than 100 pips, but I keep stressing the 100 pips because it's important to me that you achieve your goals every time, right? If you're not taking your 100 pip move and it goes 120 pips and then it pulls back 80 to 89 pips, you screwed the pooch, because your goal is at 100 pips. Now, it's going to be multiple times, and it's been multiple times that I caught 200 pips, 185 pips. But we're not there yet. This is a brand new rules-based system that's designed to help you grow your account, right? To actually grow it and be successful at that. To actually see, some fruits of your labor, and not just be going back and forth, between winning and losing. Hey, Andrew, you like GU? You say you trade GA, but you like GU or you like UJ?
GU is my pair. I just trade GA like for some.
Okay. See, so I hear you, and listen, I can respect that, because different strokes for different folks. So I just want to show y'all this little spreadsheet that I had with my girl, right? Now, this number was really 150. It started at 150, right? She went from 150 to 453 on June 7th. The next week, her account was at 906. The next week, it was at 1,800, right? The next week, it was at 4,023. I had to beg her to take an extra trade to get it to 4,000. She was just going to 3,600. She was closing out of every dang trade, at the victory line. So these numbers could have been a lot better, but that's not the point. The point is, from point A to point B, from point B to point C, from point C, to point D, so on and so forth. So she did hit this this past week, but she's on the beach, and when she gets back Sunday, we'll update these numbers. But my point to you guys is this: this is very, very much achievable. And we'll do it every freaking week. Every week. And even the weeks that you lose, you're going to be able to make it up, right? And what I always try to stress is, let's say one week you don't make your goal, but your account grows. That's a win. That's a win. The next week you might make, double or triple. Because if you look at if you guys saw the schedule, we were still $2,000 or $3,000 ahead of that schedule that we originally planned out. We're going to have a schedule as a group. The schedule is going to say 100 to 200, 200 to 400, 400 to 800. It's probably, everybody in here will probably have well over $800 in their account after 4 weeks. It's just how it works. All right, do I have any questions? Okay, so let's talk about these trades. GU, we're going to look at GU. We need one more pair that we can trade. And what I would like to do, since we already have somebody who does the work for us, we can take an order block. Do y'all know where the order blocks are listed every week in the Discord?
Swing Traders channel.
Swing Traders channel, right? If you come down here and we look at this Swing Trader channel folder, somebody has already done all the hard work. We can take one of these order blocks. Nope, we're not taking gold. We're not taking silver. We're not taking SPX. Later on, as we go forward, I'll be interested in entertaining that, because you can get paid. But because of where we're at, I would rather stick to the pair, because there are people who think that we can't get paid off these pair, right? So I know GC and GU they got the same bullish order block. So we can take these two pair and we can look at these pair. Now, I'm already telling you though, the first trade will either take GU or GC. And the second trade, we're probably going to be looking at UJ, because I'm trading my real account, and I ain't got time to miss a couple hundred pips on the UJ move. Okay, so what I need everybody to do to make sure you in this Zoom chat, there's an invite. Is it still up there at the top? Did everybody see the invite in the Zoom chat? Everybody see the Discord invite?
You said on in this Zoom or
Yeah.
on a Discord?
In this Zoom chat, there's an invite.
Okay, I don't see it. Maybe I can.
I don't see it
No.
either.
Y'all see it now?
See it now.
Yeah.
Everybody
Yeah.
see it?
Now I
Okay.
see it.
All right, it's going to take you to the Discord chat that we'll be using. And in that Discord chat, this is our chat where you can mark your chart up. If you need help, if y'all need to see how to mark up the chart, because I want us to mark them up the same way. That way we all see the same thing. Did everybody click on that on the invite?
It says you're already a member. Asking for it's clear.
Yeah, same for me. It just takes me to the rules.
Sweet baby Jesus.
Is that the one that he just commented in rules?
No, so don't use that one. Let me see.
Okay.
I don't know why it add members or roles. We don't want to add roles. Man, how come it doesn't let me give the invite anymore? Okay, so let me see. Gigi, you're in here. Okay, who else is in here? Selena. All right, I'm gonna need y'all's Discord names.
Michelle W.
Michelle W. You have some pink or purple? Purple.
A purple top, yeah.
All right, cool. Next. I got
Yes, Todd, I would be on the tenure. So LeVar would be on the tenure. So if you send tenure one, I guess I'll be in.
what up, man? What up?
How you doing, Todd?
Oh, I'm chilling, man. I'm chilling. You said Kenya L?
Yeah.
Yeah, I got her. Okay, cool.
Yvette,
Who's that?
Yvette,
YVETT?
YVETTE.
Okay, I got you. I got you.
Thanks.
Lisa D.
Okay, Lisa.
Kalechi.
Kimmy. I'm just gonna add Josh. Is Josh doing it?
I would think so.
Yeah, I'm just gonna add him. I know he reached out.
Okay.
Hassan?
Send him a text. Who? Hassan?
Yes, sir.
Are you a part of are you coming from
C4S Club?
yeah, I don't see you. So Hassan, that's your Discord name?
That's my real name.
That's his last name.
Yes.
So what's the Discord? What's your name on Discord? I gotta have your Discord name because I gotta add you from Discord.
Yeah, I'm trying to find that. I don't even know where to look at.
It's OLA
Okay.
NR EWAJU.
Wait.
That's my full name. That's my first name.
Hold on. Joshua, because I just deleted. Okay, so OLA
NRE
NRE.
WAJU.
It's not even popping up.
Yeah, that's my first name.
But I get it. So what's your name on Discord?
Trying to see where to check that. I don't even know what it is.
So
it's probably gonna be Lanre Black. LANREBLAQ.
yeah, there you go.
Okay.
Okay. All right, who's next?
TT. I was about to say, get TT in there. Mm-hmm.
Summer Rain and TT. TT, what are you doing here, TT?
Huh?
What are you doing here?
I'm doing the challenge. What you mean what I'm doing?
Let me see.
I want to know because I like how this particular challenges. I want to learn how to do
Yeah,
it.
look, I'm giving you a hard time, but you're
So,
making money, so I don't want you to be. Let me see.
my sister need to be in here too. Her big head.
Man, I ain't talked to your sister and so.
Oh.
Hold on, let me just add these people first.
I said, don't tell nobody.
That's what you said.
Kai.
Oh, Kai. Kai. What?
Oh, I'm screwed.
Okay, who's after Kai?
T Montana.
T Montana.
Yep.
Okay. Who's next?
Phumzile.
Can you spell that, please?
PHUMZILE.
PHUM. Is that your
Z
Discord name? I don't, it's not coming up. PHUMZ.
M. Yeah, ILE.
Are you a part of Tanisha's group, or you're a part of IC40?
Yeah. Yeah.
Okay, so what I need you to do, as a matter of fact, I'm gonna go to Tanisha's group. So if you can, let me get out of this. I wonder if it even let me do it like this, because we're not friends. No, it's not. Okay, I'm gonna have to copy. Okay, can you accept that oh, wait, you joined already. Why is this not? Let me see. Let me see if I can go back and do it now. So how come this is crazy? Hey, Fumzili, did you accept that role? Did you accept the invite that I sent you on Discord?
Oh, let me check.
Weird that it says you. All right, who's next after Fumzili? Everybody else is a part of it. Did I miss anybody?
A part of what? IC4X or the group?
The group.
Okay. I don't see it yet, but I think it's because it's just the channel. That's probably why I don't see it yet.
Okay, I
How
got
do I
you.
check if I'm already added?
So look, when y'all go to Discord, can y'all see my screen?
Yeah.
Mm-hmm.
SMC
Yeah.
Traders.
Right. Okay.
Can everybody go to Discord and see it? In fact, I can show you who's in here.
Okay.
Overview, I don't care. There's 13 people.
Okay, I'm there. I see me already.
Okay, as long as y'all see y'all's name, y'all are good.
Hey Todd, any idea?
You said what? You're
Any
giving me.
idea? I don't see my name.
Okay, let me see.
Right? Here is a video of that guy.
What's your name on Discord?
ENIYEDE.
visiting his own power in Niger Republic. And
Nigeria.
Yes.
Perfect.
when these guys opted out of the
I don't see mine need is Reggie Ransom.
suffer, teamed and bonded together up to today. This is how it feels, by the way.
Michael Gatt.
Over democracy, where your elected criminal politicians are looting you dry. You can't even find.
I'm not there.
See my time. Was it in there? Oh, shoot, sorry.
Edeki, just write EDE.
I'm just saying, right? But take a look at this.
I think everybody. I think that's everybody except for who said they didn't see their name. You can change people who are online and 7 people who are not. Selena, you're here.
Okay, I just probably got to restart my Discord because the channel's not popping up.
Oh, Todd, you didn't add Josh.
I added Josh, but I think he has to.
Oh, I see it. Okay.
Old man.
Okay, so basically for this Discord,
Everything white.
I pinned this message. All right, all I did was recycle the room. We used to do a Naj room, but I put
those who are not the us as we speak.
You're getting feedback. I can't hear you.
Yeah, I can't hear you.
I just muted. So I pinned a change of character, the one that we watched this morning. This is a very good video as far as change of character. We will continue to talk about these same things every week, right? Just like we talked about what we need for an actual trade setup. So I pinned this video in the group. Hopefully you guys will watch these videos multiple times because it might take you a few times to actually understand, what it is we're actually looking for. When we look for trades, right? It's important to understand what we're looking for in regards to, what's a good trade setup. The order block, the imbalance, right? And the break. If you have all 3 of those things, you have a good trade setup. You can expect price to push down back into the area to mitigate these zones. Eventually, price is going to come all the way down to this zone right here, this demand zone, because you have all 3 of those characteristics. But before the price comes all the way down to this demand zone, there's another demand zone right here. Order block, imbalance, break of structure, right? This zone broke these structures. So before the price gets all the way down to this zone, it's going to react from these zones. All we're trying to do, we're not trying to catch every move and all of every move. We're trying to catch the pips that we need to take our account to the next level. Every week, twice a week, if possible. If we catch it once, that's cool. But if you catch it twice, that's awesome, right? So we're looking for 100 pips a week and a flip to our $100 account. Now, I would not be surprised if you go from $100 to $1,000 in 2 moves that week. It's possible. It's possible. You can use, for a $100 account, you can use $3 per lot or $3 per pip if you want to. That's up to you. You can use as little as $1 per pip. Again, that's up to you. If we're doing the things that we're supposed to do, we're catching these trades the way we're supposed to catch them, you will find a comfort level in your trade setups. And when you see them, there's no mistaking that is a valid trade setup and it's a good trade setup, right? Like once this price gets here, I'm jumping all over it. I can use the max because it's at an area that I know is pushing down, right? If this pulls down here and we decide to take this buy and we turn around and it starts buying, it gives us our chalk here. I can hop in with full confidence that I'm getting my move. So all I ask is every week we all put in the work. That means we all do our analysis, right? And we drop it in that chat. It's nothing wrong with, if your analysis looks a little bit different than somebody else's. But the important thing is that we all doing the work. Once we all doing the work, we'll all start seeing the setups, and then we can, we can advance our accounts, based on the trade setups. Any questions?
Yeah, Ty, can you go to the monthly time frame on GU? So where do you see we are coming up like to this imbalance, right?
Yeah, I think we're going to end up going on. I think we can push all the way.
Look, I want to show you something again. Marked out that imbalance like the high.
You say you what?
Like, can you mark it out like the place, the up?
These highs?
No. Like overall where we are heading to.
Oh, where I think, okay.
Yeah.
I think we're heading just imbalance.
So if you take your fib,
from
your
the
fib,
top to the bottom?
No. This latest swing high, the high, this one, the green candle.
This one?
Right. This one, the green candle, yeah.
Oh,
So if you flip that candle from
Okay.
down to the top.
Okay, yeah, I see what you're
No,
saying.
not that one.
This
the
one?
swing high, the swing high. No.
This one?
Exactly. Flip that candle.
From down to up?
No, yeah, down to up.
You mean like here?
No. Just the candle. Just the candlestick.
Sure, you're fibbing it from.
No, yeah, from down, yeah.
Okay,
right.
Okay.
Where is your negative 27?
You said where's the negative 27?
Yeah.
It's right above that imbalance.
Right. That is the exact point we are going to.
And you got that based off the swing high, the pullback from the swing high?
Right. So whenever we have a major highs like this, that is where market likely to pull back from when we get to that place. It's another way to use like your Fibonacci, like is that the negative 27 or 61.8? And for this one, you can see how we are aligning with the fair value gap, just the low.
Yeah, I can see what you're saying, but to me it's confusing if you're just fibbing this candle and the market tears up below it and comes back. I get it. You're saying it's kind of a cheat code to see where
exactly to see where like the actual move is heading, before we like pull back to wherever other block or wherever, for the continuation.
Yeah. I can dig it. But just for the people who are novice with smart money, I know some people don't. Some people are coming here with little to no knowledge in smart money. And look, from now on, this is the last time I'm going to do this meeting so late, because there are a lot of people. I talked to a couple of people from London, and this is a demon time in London. So we'll never meet this late again. I just wanted to get a read on who wanted to join. So when we have a meeting, it will be earlier than this. Hey, Shajaria. Is that how you say it, Shajaria? Did we add you to the Discord group? I just want to make sure I didn't leave anybody out. Michelle, did we add you to the group?
Yes.
Okay, okay. And did we add your girl to the group? Or we'll just do that when we meet? Okay, but anyway, there are, you know, once we start doing this on a regular basis, you guys will kind of pick this up, you know, and if we can just keep to the same way, if we do things every week, this will become like second nature. And you'll learn like cheat codes and shortcuts. But just so y'all will have the basics. I'm trying to stick to the very easy elements of smart money concepts. Y'all will see me use a lot of different time frames. You know, don't let that throw you out. If I'm using the 2-month or the 3-month or the 10-day, you know, I like to manipulate the chart to see a picture that I like to see. All right, any questions? If y'all are good, then, you know, I don't have anything else.
So,
Hey
quick
Todd,
question.
you spoke
Okay.
about the meeting time. What time you think you would do it? You didn't say what time, unless I just missed it.
Well,
On what day?
You said what day?
Yeah, what day and what time?
So we would probably meet on Saturday, you know, a little bit earlier. You know, we have a regular weekly meeting, but if y'all have a different day that y'all want to meet, I'm cool with that. But I want to be able to meet earlier so the people from London can be a part of it. As far as the pairs that we're trading, whenever I have the meeting on Saturday, my weekly meeting on Saturday, it's going to be tailored to this group. So I'm going to go over the things that I would normally go over. It'll be tailored towards this group. The order blocks, the trade setups that I see, the trade setups that I like, and breaking down the trades that we took, you know, the previous week. Just like I told y'all about the trades that I took last week. That's going to be how I'm going to cover the weekly meeting in our chat. And if I have like sidebar notes, I'll make a short video and I'll post it in that group, in our group. If y'all need me, you know, I'm available for one-on-ones or whatever. You know, like if you're confused or if you're not getting something, you know, y'all hit me up.
So I joined this very late, so I didn't catch everything you've been talking about. So what we're gonna be looking at is gonna be order block, fair value gap, and break of structure, right?
Yes, yes. That's the 3 elements of a trade setup. Now, I recorded this because somebody told me to record it. I'm going to drop this recording. The link to this recording is going to go in our group chat. Who am I speaking to?
Hassan?
Okay, so you're part of the group chat, right? The 100.
Yes.
Good.
Yes.
So once we get finished, I'm going to drop this recording in that group chat. That way you can go back and listen to it. All I did was show a couple of trades that I took last week, and I explained the reasoning why I took those trades, what I looked for. And going forward this week, I broke down GU, right? I'm asking that you guys break down GC, right? You break down the GC move because GC is a bullish order block, right? So I'm asking you guys go ahead and break down GC and drop it into the chat for this coming week.
Todd, I have a quick question. So for future reference, when you assign us the homework, you're always going to let us know which pair that you want us to drop in the chat, or will it be more like pick one of the OBs and mark it up and then drop it in the chat?
Well, we're always going to trade the same pair.
Okay.
So I'm always going to pick the pair, because I'm going to pick it based on a reasoning, right? I like to pick pairs that give me the advantage. I don't want to pick a pair that I feel like I don't have the advantage, right? So every week we're going to talk about on Saturday, and I'll do it at the 10 o'clock call. Every week we're going to talk about my favorite setup. I used to do this back in the day on the Saturday call, and I just kind of went away from it and started like just kind of opening up for the whole group. But I'm going to start tailoring that call to smart money traders, right? Because Kim has a good thing going with the other style of traders, right? So I want to get a group who is interested, focused on the smart money aspects of trading. Somebody asked about a broker. It doesn't matter. You can use Osprey FX, KOT Forex, any broker will work. Now, what you're going to need though is 1 to 500 leverage, right? If you don't have 1 to 500 leverage, you're not going to be able to use the heavier lot sizes.
So what is that with Osprey? I mean, Owenda. Owenda.
Well, who? Who do you use? Sway has 1 to 500, right?
I think it's 1 to 200. I think.
If I'm you, I'm definitely going to KOT Forex or Osprey FX. I'm not using Sway.
KOT Forex still in business?
Yeah.
Oh.
Yeah, girl.
I used to have them, but then when they started switching over and doing some weird stuff, I was like,
Oh, yeah. Mm-hmm.
So
Yeah, I
KOT
typed those
Forex,
two
everybody
brokers
good
in
with
the chat. I didn't hear the KOT Forex is something else. I didn't catch that second one.
And Osprey.
Osprey. Okay.
And I'm not an affiliate of either one of them. All I'm saying is if you 1 to 500 leverage is what you need to use the larger lot size. 1 to 100 ain't gonna cut it. You can't grow your account very fast with 1 to 100.
Man, top one trader got that 1 to 100. Got me sick sometimes. Like,
yeah, it sucks. It's if you have a funded account and it's 100K, a 1 to 100 is fine. But for a $100 account, if you use 1 to 100 leverage, we're gonna be here all year. All right. If you're an overseas person, you can use Fusion Markets too. They're a regulated broker. I got an account under my girlfriend's name, Fusion Markets. It's 1 to 500 too. The thing that I really like about Osprey or KOT Forex is when you start trading the indices, you can use the mini, right? The mini makes the indices a lot easier to trade because it doesn't cost you as much.
Right. I like that too.
All right, any questions? So, all right, so the only homework we got is to break down GBP CAD, right? All you doing is fibbing that candle, marking your zone, marking your 78, dropping down to the 4 hour, and lining your trades up with the imbalances, like annotate your imbalances in your zone or at your 78. All right, good folks. If y'all don't have nothing else, then we can I appreciate